important case study on CRAR. This is very important. CRAR, the most difficult topic in BFM. So that we'll be covering. Second, we'll be covering some theory topic if possible, but importantly, we'll be covering some objective questions. Okay. So this theory topic I'll cover in the case study itself. While solving the case study, I'll discuss the same because this case study is of the utmost importance and you'll surely get it in exam. So beforehand, I would suggest you download Adda 24/7 app on your mobile. Also join Officers Adda 24/7 YouTube channel on YouTube channel. Over here on Adda 24/7 app, you'll get the study material, live courses, live classes, recorded videos, tests, everything you'll get it at one go. So don't go here and there. Directly join Adda 24/7, download this app and move on. Okay. So let's move on. So let's start with the first part, that is case study. So before that, I'll come to this later, but just to give you a hint that we are starting this selection batch on June 6th. It's a crash course, fast batch. So join this as fast as possible. I'll come to this later. Okay. So let's start with the case study. Computation of CRAR. It's directly from your Macmillan book. Okay. So what is given? In a bank, Tier 1 capital equals to 1000 crores. Tier 2 capital equals to 1200 crores. Risk weighted asset for credit and risk equals to 10,000 crores. Capital charge for market risk equals to 500 crores. Capital charge for ops risk equals to, ops means operation. Okay. Operation risk equals to 300 crores. Find tier 1 capital and total CRAR. Tier 1 CRAR and total CRAR. Now important part over here is, remember one concept. What is this tier 1 and tier 2 capital? If many of you don't know, then what? See here. Capital consists of two parts. Okay. Capital of any bank. Firstly, what is the formula for CRAR? CRAR equals to, I'll directly write here, capital upon RWA, risk weighted asset we call it. Okay. Risk weighted asset. Okay. What is capital? T1, tier 1 plus tier 2. These two capitals upon, what is RWA? Again we have three RWA, credit plus market plus ops. Ops RWA, combined RWA it is. I'll write it over here, RWA. Okay. Combined RWA. So what is the target now in this problem? Our target is, one is first find CRAR. See what is our CRAR? So for CRAR we'll be needing all these things, T1 and T2, then credit RWA, market RWA and ops RWA. So how to find it? Okay, firstly before that, what is T1 capital? What did I tell you? I'll be covering the important theory within that topic itself. So what is T1 capital? T1 capital is a free capital. Free capital means what? Free means here, what does T1 consist of? Firstly, tier 1 means it consists of equity capital, not preference capital. Okay, equity, common equity, plus plus this reserves and surplus, plus net profit. Okay, so that's a part of tier 1. What is tier 2 then? Tier 2 is a borrowed capital. Borrowed means what? I buy from you at an interest. Okay, and then I use it. It's a loan basically, isn't it? So T2 is a borrowed capital. I'll write it over here. T1 is a free capital, free. Okay, and T2 is a borrowed capital. Okay, so BRRR. Okay, borrowed capital. I'll just one second. Yeah, it's a borrowed capital. So I'll just write borrowed over here. Okay, so T2 is a borrowed capital. So borrowed means basically if I take some loan from, what are the types of borrowings? Borrowings can be in terms of BO, just I'll write borrowed over here. Okay, so if I take the loan in terms of from the bank, or I issue some bonds, then also it's a borrowed capital. Now what is RWA? RWA is always calculated using, important part remember, total loan minus collateral. Okay, collateral. Okay, total loan minus collateral. Now here both of them, for loan and collateral, we apply haircut factors. Haircut, I have already covered this in my earlier lectures. Also I would suggest you to join the fast batch or the selection batch which is coming up. Okay, there we'll be covering it in deep. So haircut factor is applied to both loan as well as the collateral. Okay, so now we got the idea of what is capital, what is CRAR, meaning of this, importantly. Meaning of CRAR, meaning of CRAR means what? How safe that bank is. So general CRAR given by RBI is 9%. Okay, 9% by RBI. For Basel it is 8%. For Basel, okay, so I'll write it over here. 8% is for Basel, and this is by RBI, 1% extra. Okay. Okay, now let's move on. Now let's go to find this answer. Okay, what is the tier 1 capital given? 1000 crore. What is tier 2 capital given? 1200 crores. Now remember one important formula for tier 1 and tier 2. Always remember T2, tier 2 cannot be greater than tier 1. Cannot be. I'll cancel this. T2 cannot be greater than tier 1. So what is tier 1? 1000. What is tier 2? 1200. So T2 I can't take beyond 1000. So for my calculations T2 will also become 1000 crores now. Okay, CR. Now let's go to the solution. Firstly we'll find out the RWA, because our target is what? Risk weighted asset for denominator and numerator tier 1 and tier 2 capital. Okay, so let's move on for this credit RWA, market RWA and ops RWA. What is given? RWA for credit risk is 10,000 crores. It means what? Out of these three, what are the three things over here? Credit RWA, market RWA and ops RWA. So credit RWA I already know over here. RWA for credit risk is 10,000. It's already known. So what is remaining now? Market and ops. So capital charge for market risk is given 500 crores. Whether RWA is given? No. Right? I want to find what? RWA for market risk. Similarly, I want to find what? RWA for ops risk. Right? So let's find out these two. How to do that? Let's see. See, the formula for this is again simple. CRAR, use the same formula. Never change the formula. CRAR equals to capital upon RWA. Okay. Now we want to find only for market. So apply this only for market. But CRAR remains the same. So 9%, 9 upon 100. Percent means 100. Okay. Equals to capital. This capital upon RWA. So capital is what? Capital is given for this. What is given? 500. Right? For market. So I'm just finding it for market risk now. Okay. 500 upon. I'll write this market RWA. Okay. RWA. Market RWA. Okay. So how will I find this market RWA now? Market RWA equals to 500 into 100 upon 9. Isn't it? So 500, I'll write it over here. MR, or final answer I'll write it over here. MRWA equals to, calculate this. Do it fast. Everyone do it. 500 into 100 upon 9. Right? I'll cross this over here. So 500 into 100 upon 9. Everyone got this question? Has everyone got this? Yes? Yeah. So find the answer fast. 500 into 100 upon 9. Are you getting the same answer which I have? 5556. Are you getting the same answer? Type yes if you have got it. Everyone type yes. Fast. I want to see at least 15 to 20 yes on the screen. Okay, in the comment section. So type yes fast. Yes, yes, yes. Now you guys are typing. Okay. So 500 into 100 upon 9. So this becomes 500 upon 0.09. So it is 5556. So this answer, second RWA I have got it, market RWA. Now third RWA is ops. Same logic. So 9 upon 100. See this now. 9 upon 100 equals to what? What is the this capital for ops raise given? See this. It is 300 crores. Okay. So it is what? 300 upon ops RWA. I'll write it OPRWA. Okay, so that you'll understand it better. OPRWA. Okay. So what is OPRWA now? Cross it again. So OPRWA becomes what? OPRWA becomes what? What is the answer? Cross it. Everyone do it again. 300 into 100 upon 9. What is the answer you are getting? Everyone. Yes, everyone. Fast, 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 fast. You should get the same answer. Type yes if you have got the same answer. Everyone. Type yes. Again, I want at least 10 yeses. Okay. Type yes. Fast, fast, fast. Have you got it? 300 into 100 upon 9 or 300 upon 0.09. Everyone has got this answer. Has everyone got it? 4 times 3. Everyone should get the same answer. Yes. Now I am seeing some 10 to 12 yeses. Yes. So this is okay. Use your own calci. Remember, in exam there is no one to help you. Only you yourself would be there in the exam. So now tell me, what are the total RWs I have got it? I've got it for credit, I've got it for market, I've got it for ops. So total RW is what? What was the formula? See this. Total RW is credit plus market plus ops. So I'll now add all these. So how to add this? See this. 10,000 is credit, 5556 is just now we have found out, and ops is 4 times 3. Just add them, and this is the total RW you are getting. 18,889 crores. This is the total RW. Remember this figure, okay? 18,889. Okay. Now, what is my target? Remember, why are we doing all this? My target is CRAR. Okay. So, how to get CRAR? Again, the formula CRAR is what? Capital upon RWA. What is capital? T1 plus T2 upon all these 3 RWA. We have found out the denominator. Now, let's check the numerator. So what is the numerator? Tier 1 capital is given as what? 1000 crores. Okay. This is, you know, tier 1 is 1000 crores. Now, tier 2 cannot be more than tier 1. So tier 2 capital can be maximum up to 1000 crores. So what will I do? T2 I'll take it as 1000 crores only. I can't take 1200 crores. Even though it is given in the exam 1200, I can't take it. Okay. So I'll take only 1000. So what is my total capital now? T1 plus T2, right? So 1000 plus 1000, 2000 crores. Now I've got my total capital, this part, this figure, plus I've got total RWA, right? So once I get this, what should I find? What is the question to me? Find tier 1 CRAR and total CRAR. So what is tier 1 CRAR? Tier 1 CRAR is simple. See this. Tier 1 capital, see this formula is always the same, it never changes. Capital upon RW. If I want it for tier 1, then tier 1 capital upon RW. So what is tier 1 capital? Tier 1 capital, see this, tier 1 capital equals to 1000 crores upon total RW. Total RW is same, 18,889. So 1000 upon 18,889, of course into 100, because whenever you find it as a CRAR, you have to find it as a percentage. So multiply this by 100. So then you will get this answer. What? How many of you are getting this answer? You try it yourself. Everyone should try this 1000 upon 18,889 into 100. So everyone try this. Give me the answer. Again, I want at least 10, at least 10 answers, because this is the easiest one. At least 10 answers I wanted. So how many of you are getting it? 5.29%. Type fast, type fast, type fast. Yes, I'm waiting. Yes, now I'm getting some answers. So type fast. Done? Yeah, 6, 7, 8, 9, 10. I've got the 10 answers. Okay, everyone else must try. Why ain't everyone trying? Because you have to solve the questions yourself in exam. Nobody will be there, so try it yourself. Type yes or type this 5.29% if you have got the answer. Don't bluff. You are fooling yourself if you are bluffing. Okay, so do it yourself. I am here just as a facilitator. I am just acting as a guide. Okay, so you have to solve the problem, every problem yourself. Okay. So tier 1 capital is 5.29%, got this. Now second one I want is total CRAR. Sorry, tier 1 CRAR is 5.29%, right? So I want total CRAR. Total CRAR is what? What is the second question? See this, tier 1 CRAR and total CRAR. So total CRAR is what? Total capital upon total RWA. What is the total capital? Tier 1 plus tier 2, 2000. So 2000 upon 18,889 into 100, of course. So that comes out to 10.59. Type again, everyone solve this problem again. 2000 upon 18889. Has everyone got this answer? I am waiting, I'll give you 10 seconds. Tick tick 1, tick tick 2, tick tick 3, tick tick 4, tick tick 5, tick tick 6, tick tick 7, tick tick 8, 9, 10. Right? Almost everyone has typed 10.59%. Okay. So now we have got the total case studies over. Now my next question to you is, tier 1 capital is 5.29%. Tier 2 tier 1 CRAR is 5.29%. Total CRAR is 10.59%. Which one is good? Tier 1 is good or total CRAR is good? Which one is good? Second is good. Correct. Why? Because it is more than, yes, answer. It is more than, what did I tell you? It should be minimum, it should be 9% as per RBI, right? So this is more than RBI's prescription, so this is good. But what about this? This should be at least 7%. Okay, so this is bad. Okay, this is bad, this is good. So what the bank has to do? The bank has to improve its tier 1 capital. So it has to get more shares, common equity, it has to earn more profit. Okay, so that was a case study over here and the important theory to be covered over here. Okay, before going ahead, let's come to the batch here. We are starting this batch on June 6th. In that batch, we will be covering 35 plus hours of ABM BFM, mocks and ebooks. The similar problem which I took just now, almost many problems of that sort. Last minute preparation, recorded videos 24/7, solve unlimited doubts, JAIIB, CAIIB, this July exam. So join this as fast as possible. See here, this case study you found it, when you read it in the books, you might have found it difficult, right? What you didn't, you might not have understood it. Now you have understood it. Why? Because the way of teaching, we at Adda 24/7 always see to it that the things are made simpler. So that's why I'm saying join this class as fast as possible. When you join this class, you'll we'll see to it that all the case studies, this was a simpler one. There are many difficult case studies. These case studies are made into a simple language, okay, so that everyone understands. What is this code Y432? Use this code Y432 to get the discounts. So how to get the discounts? I'll show you at the end. Okay, so wait till the end. Also, now we'll be going for the objective questions. What is the now it's time for you to answer. What is the financial risk that refers to the uncertainty over the future interest rates and their impact on the company's future cash flows and the fair value of the financial instruments? Means, what is the financial risk that refers to uncertainty over the future interest rates? Future interest rates. So what is this financial risk called as? Price risk, credit risk, interest rate risk, or foreign currency risks? Answer is very simple, right? I gave you the hint over here. So type the answer. I'll call this A, B, C or D. Type A, B, C or D. Okay, which is the answer? A, B, C or D? Fast, 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 fast. A, B, C or D. Okay, very simple. It's over here. Answer is given over here, so answer is correct, right? Everyone is typing the correct answer. Answer is C. Interest rate risk, right? What is the interest rate risk? Interest rate risk means the interest rate at which I bought the bond or purchased the loan or purchased the FD. Okay, bought the FD from the bank. Will that same interest rate remain in future if I have to reinvest? If I have to repurchase the bond? So it may happen that the bond interest rate may go down, right? So that is known as the interest rate risk. Okay, the basis on which my future cash flows depend. If the interest rate in future goes down, then my future cash flows will come down. Let's take an example. For FD, let's say the rate of interest was earlier 8%. Now it has gone to 5%, let's say. Okay, so 8%, 1 lakh FD gave me what? 8,000 per year. Then this now that 1 lakh FD will give me how much? 5,000 per year. So 3,000 is my loss. So this is the impact on the future cash flows, right? Impact on future cash flows means this 8% to 5% reduced. Okay, Next, what is the financial risk pertaining to the possibility of a contract being dishonored? Contract being dishonored means I have entered into a contract and then it is dishonored. Now this is a very typical problem. Price risk, credit risk, interest rate risk, foreign currency risk. A, B, C, D, which one? Contract being dishonored. When contract is dishonored means what is the contract actually? Contract is always between the buyer and the seller, okay? Or for the loan, it's always the loan provider, debtor and creditor, right? Creditor is the one who provides, debtor is the one who takes. So the contract will be between these two guys only. So what is the problem to whom? The problem will always be to the creditor. Means I've given the loan to you and you don't repay. So that is the problem of type A, B, C, D. Okay, I'll give you a hint. A and B only. C and D are out. Okay. Foreign currency doesn't exist over here because this is a contract in the same currency we are talking. Otherwise, they would have mentioned it over here. That in different currencies. Okay. So only A and B. Which one? Fast, 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 fast. 5 seconds. Tick, tick 1. Tick, tick 2. Tick, tick 3. Tick, tick 4. Tick, tick 5. Correct. Everyone is answering this credit risk. It's not, some of you have answered this price risk. Price risk is totally different. Okay. Price risk means what is it? It is actually related to interest rate risk. If the interest rates go down, the price of that bond goes up. Okay. So if that price of that bond goes up, then I am at a price risk. Okay. Move on. Tier 2 capital does not include. So tier 2 means what? Free capital. So it includes what? Assets, common stock, preferred stock and retained earnings. What does it does not include? Not. Okay. Assets. If I own the assets, then whose assets are those? Mine. If I'm owning a house, so that asset is mine. If I'm owning a stock, that asset is mine. So will it be a part of tier 1? Okay, type first you answer A, B, C or D. Which one is not a part of tier 1 capital? Okay, which one? Yes. Type fast, everyone. Okay, we are very short of time. Okay. Correct. Answer is C. Everyone is correct in this. Preferred stock. Okay. Why preferred stock? What is preferred stock? There are two types of stocks. Okay. Common stock and preferred stock. Common equity we call it in over here. Common equity, preferred equity. Common equity is a free equity. Tier 1. Okay. Free. And this preferred equity is paid. Why? Why it is called as paid? Because in JAIIB. Understood? In what did we study in JAIIB? In that module C, yeah, module C. There we had this common stock and preferred stock accounts. Okay, what did we study? Preferred capital is a paid capital. Okay, you have to pay the dividend if you have not paid for certain year. Next year you have to pay it with arrears. That's called as what? Understood? What was that part called as? Everyone answer. What was it called as? There were 3 qualities to preferred stock in JAIIB, right? Which one were the 3? Yes, cumulative. Second, participating, and third one was redeemable. Now go through it again. Okay, this is known as cumulative. Means if I don't give the dividend in 1 year, then next year I'll have to give the dividend with arrears. Okay, that's why this is not a part of free capital tier 1. Okay, tier 1 capital is also known as what? Preferred, core, common cash and preferred assets. Answer is very simple. Okay, A, B, C or D. Type fast. A is out. Okay, cash is out. So core capital, preferred assets. What is the answer? B or D? Fast. B or D? Yes. The answer is this. Okay, core capital. Tier 1 is always the core capital. Okay, and tier 2 is known as supplementary or borrowed capital. Okay, what is here? Same question. Tier 2 is commonly known as what? Core, supplementary, primary, none of the above. Core, just now we saw it. Tier 1, so out. None of the above, out. So now answer is either B or C. Supplementary or primary. Is tier 2 a primary capital? Then what is tier 1? Right? So Tier 1 is the primary capital. Tier 2 is the correct. Everyone. Supplementary capital. That is the answer. Okay. Supplementary. Many of you know this and many of you are typing correctly. But I want everyone who is watching, everyone should type this. Okay. Firstly, subscribe for this Adda 24/7 YouTube channel. Okay. Officers Adda. Firstly, subscribe. Go there and subscribe. Immediately subscribe. I'll wait over here. Subscribe immediately to Officers Adda 24/7 YouTube channel, so that what happens, and click that bell icon, so we come up with regularly with the new videos. It's for your own benefit. Go for it because it's freely available. What are you doing? What is there any wastage of any money for this? Go for it. Okay, move on. What is the primary difference between tier 1 and tier 2 capital? So tier 2 capital is seen as the riskier than tier 1. Riskier. Tier 1 is cash on hand and tier 2 is stocks and bonds. Means tier 2 is consists of stocks. Okay. Tier 1 is seen as riskier than tier 2. Tier 1 is riskier than tier 2. Okay. There is no difference between tier 1 and tier 2. So D is ultimately out. Now its answer is either A, B or C. Which one? Which one is riskier? What do you feel? What does your logic say? What is tier 1? Tier 1 is a free capital. Tier 2 is what? Paid capital. So which is riskier? If you are living your normal life, okay, in that with loans, living with loans is riskier or living without loans is riskier? Keep it simple, okay? So that's why answer A, B or C. Fast, 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 fast. A, B or C, A, B or C. Yeah? A, B or C. Which one? Fast, fast, fast. Yes, 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 yes. Again 5 seconds. Tick, tick 1. Tick, tick 2. Tick, tick 3. Tick, tick 4. And tick, tick 5. Correct. Answer is this. Tier 2 is more riskier because it's a paid capital. If I don't earn or I don't make the profits, then also I'll have to pay to these guys. Whereas tier 1 is a common stock. I don't have to pay any dividend to anyone, isn't it? So that's the point. I want not. Okay. Subordinate debt, undisclosed reserves, revaluation reserves and stock. Tier 2. Now see here, many of these things you might not be knowing, but one is very simple. Which one? Stock. Correctly. Correct. Stock here means common stock always. It's never preferred stock. If somebody wants to name preferred, they always name it as a preferred stock. Okay. So this is common equity. So this is not a part of tier 2. This is a part of tier 1. Okay. What are subordinate, undisclosed and revaluation? You come to the live class. I'll teach you over there because it's very time consuming. Okay. We have a separate case study on this. Okay. So come there. I'll teach you. What do you call the designation of one or more financial instruments so that change in their fair value or cash flows of the derivative will offset in whole or in part the change in fair value of the cash flows of the hedged items? Okay, means what do you call the designation of one or more financial instruments so that the change in the fair value of cash flows or of the derivatives will offset? Offset means what? It will balance. In which of the transaction does the balancing act happen? Hedging, borrowing, foreign exchange transaction and budgeting. So similarly, firstly B and D are out. Okay, now only A and C. What is the answer? Hedging or foreign exchange transactions. Cash flows of hedge item means already they are hedged. Means I have already done the hedging. So what remains now? Foreign exchange transaction. Okay. So what will I do? For hedging, once I have hedged it, what will I do? I'll go for foreign exchange transaction, means forward booking. Forward booking, I'll go for it. Okay. So that will offset the risk. Right? Means whatever the rate fluctuations may be in future, that would be offsetted if I book the forward contract. Okay. So that was the point and these were the questions. So I would again suggest go for this excuse me, yeah, go for this live class selection batch going on from June 6th. Okay, how to get the discount on this Y432 code? So let's see this. Okay, I'll show you over here. Okay, firstly I would suggest go to Adda 24/7 app, download this app. On this app you will get everything, but if you are on the website, then I'll show you how to go on the website. Okay, in this website, see this, when you click on Adda 24/7, what do you see? The first page itself, it shows you banking and insurance, JIB, CIB, SSC. So JIB, CIB, click on JIB, CIB, JIB, CIB, Mahapak, JIB, CIB, click on CIB. Once you click on CIB, see this, you'll see all the batches over here. Click on this selection batch, remember this. Now you'll say the fees is too much, 13,299. See here, on that page itself you'll get all the details which I have told you. You can go through them again and confirm it yourself. Okay, so you'll say the fees is too much, 13,299. Go for offers, view offers, click on this code, enter coupon code. What was the coupon code? Y432, right? That is the coupon code. Applied over here. Now look at what happens. 13,299 reduced to 3,058. Means this full batch of ABM, BFM and retail, it has come down to 3,058. There, what will you get? All ABMRs, BFMRs, notes, question papers, right? Test papers, everything you will get it. And this amount you will recover in CIB in 3 months only. 1300 is your average increment. Okay, so go for it. It's an investment for lifetime. I'll see you tomorrow with another topic. Also, I'll see you in the live classes from June 6th. Okay.